Let's have a look at our post-closing trial balance. The specific objectives for this lesson is to define the post-closing trial balance and to draw up a post-closing trial balance. Now in our post-closing trial balance we focus on our balance sheet account section, which comprises of our assets, our capital and our liabilities, not our drawings, because our drawings will form part of our capital account. Also, our nominal account section, which comprises of our income and expenses, will not form part of our post-closing trial balance, because our income and expenses are closed off to the final accounts. We need to remember that we only need to record our balance sheet account section in our post-closing trial balance. We do not record drawings. Therefore, we need to work out our capital in brackets, which is capital plus net profit less drawings, and we need to record our closing stock, not our opening stock. So now let's go ahead and do that. Firstly, we will not use our nominal account section. Secondly, we will not use our drawings account. And now to work out our capital, we will do the following. We'll say 281,000 plus $780. This amount will be our net profit, which we will calculate in our income statement, and the 11,800 is our drawings. So our capital plus our net profit less our drawings will be our final capital amount. And then the last adjustment we need to make is for our inventory, which is 7,200, and we put the date in brackets. And then to end off, we need to add up the totals of our debit and credit sides.